Hi and welcome to the market view for Wednesday, the 2nd of July 2014. Starting off with yesterday's 30-minute chart for the British pound, you can see that we had a buy signal yesterday morning at 9 a.m. and then at 9:30 we had a potential sell signal. Then the manufacturing figures came out a lot higher than forecast, and we see the market move up just under 50 pips between these two grey shaded lines, which are 50 pips. So eventually we see this market move up 50 pips, but not actually give us a signal that we could actually get onto there, unfortunately. So the market trading up to 171.50 and then doing nothing in the afternoon. The market trading through and then coming back below the 171.50 level there. And then the high for yesterday is 171.65 there, which of course we see from the pivot line. So the market making progress and continuing to move higher. We can see this in the daily charts. We've got yesterday, you can see that 50 pip range there as the market moved higher and is currently trading just under the 171.50 area there at the moment. So just putting a mark upon here of the potential downside targets. Again, I'm just going to click twice on the low of this up bar because there's nothing else really left behind at the moment. So the potential downside for this market, should it pull back during today, is going to be 171.21 and 171.11 there. So let me just save this before we have a look at the news. So on the news front today, let's start off nationwide. HPI we have out this morning at 7 a.m. It's 6:40 at the moment, so this hasn't been released yet. We've got construction PMI, which is out at 9:30 a.m. and then we're off to the US for the ADP non-farm employment change. You don't want to be in the market when this one comes out. Factory orders for the US crude inventories, and Yellen is going to try and boost the market tonight, which we're going to look at now. When I say the market, I mean the Dow. And as I have said, that we saw the buying come back into this market on Friday, and yesterday the market traded straight through the 76%. It did this all in one go. From the open, the move for the day was actually taken care of, and we had a brand new historic high yesterday, the high of 16,998, just a couple of pips off that 17,000 target which I've been talking about. Unfortunately, the market didn't do it yesterday, but I've no doubts that whatever Yellen says this evening, the market will react and go on to achieve this. Now, this poses the question of how much higher this market can go, and that can be seen by looking at the implied volatility. Yesterday, we dropped down to 844. The all-time low is on the 20th of June of 840. So you can see there that we've got historic lows in historical volatility, and we're back down at those levels. For the implied as well, we are in historic low territory at the moment. The market is still maintaining this, which in normal times would indicate to us that there is a major correction coming in. This seems to be the consensus across the board, but the market is still continuing to move higher, and unfortunately that's what we have to go with at the moment. The market wants to go higher, so all we can do is trade with the trend as opposed to trying to book the trend. We need to wait for the market to break towards the downside, rally back and fail to close above the 76% retracement before considering a trade to the downside. So had the market have traded up to 76 and then offered some selling, then we could have considered a short. But at the moment, this market wants to move higher, and it's something that I have spoken about in the last few weeks, that this 17,000 psychological level is an important level. And speaking of the Dow, just to let you know, the testing is going really well with the intraday charts. Just a few fine-tuning aspects being taken, but at the moment up over 200 pips for last week. This week a bit lackluster, the market not being too kind. We was a small profit yesterday, the day before, of 4 pips, and then yesterday the market moving just higher from the off and failing to give a signal, unfortunately, so no pips for yesterday. But last week, great week, over 200 plus pips for trading the Dow through all of this sideways motion. So let's hope that this continues. So I'll keep you posted on that and give more information as and when the testing continues. But I just thought I'd keep you in the loop of where we are with that. And then, of course, in the market view, I give you the bigger picture of the Dow, not necessarily the intraday at the moment, but that will be coming on stream at some point in the future. I just want to make sure that the markets are acting and reacting as I want them to, in order to give you the opportunity to make a couple of hundred pips, hopefully, each week. And so far, so good. But apart from this week, as I say, we've just yesterday the move was just straight from the open. It went up in one go. I don't know based upon what, but it did. And the day before we had two losses, one winner, and it was a net of +4. So interesting week, and these things are like that, of course. But at least there's a lot of activity there and plenty of trades. But like I say, more on that later. I'm just keeping you abreast of what I'm actually doing during the afternoons when the Dow is open, and of course later on in the evenings as well. Right, well, that's it from me this morning. All things being equal, we'll see a bit more activity today, and hopefully a few more signals as far as the the British pound is concerned. We're getting the movement, but unfortunately the signals aren't qualifying in time, or again, like we've seen for an awful long time now, the markets are moving on the news. Right, all things being equal, see you tomorrow, and have a great day. As ever, thank you for your support and also for watching.